Good morning. Today is June 8th, and it's the last day of our 4-day special podcast series about going through the current debt situation in the United States, going through the interest rates, inflation. What does it all mean? How we went from 1300 all the way through to see where we stand um, from a debt position today, how health entitlements are really the big cause of where we are today in terms of the budget situation, and how we potentially, and we talked a lot about this yesterday, how we potentially can resolve the situation over the next decade, but it's going to require some moderation in Medicare spending, and it's going to require potentially some creativity in the tax code, not necessarily higher taxes, but maybe a little bit more creative in terms of pro-growth tax policy. One quick addendum to yesterday, and we talked a lot about the need to reduce Medicare spending. That's reducing Medicare spending relative to the budget. So I'm not saying cut Medicare spending. I'm just saying grow it at 4.2% rather than 7%. And we already pay triple the price, double or triple the prices on pharmaceuticals. We do we pay physicians twice as much. I'm not saying, again, we don't need to cut those things. We don't need to cut the cost of surgeries. We don't need to cut the cost of pharmaceuticals or ER stays or anything like that. Just grow it at a slower rate. And at a more normal rate. In fact, at a rate that the economy is growing. So if we can do that, we're in good shape. But the problem is you have a lot of special interests involved, and as long as that continues, you continue to see healthcare spending outpace the broader economy, and that's an unsustainable situation. Shifting gear to today. I would note that we did have a higher initial jobless claims number this morning, so we'll have to Memorial Day may have factor into that. So we'll have to see a bit more on that. But in terms of the near-term economic situation, that's just crossing the tape. But today we're going to focus on the reserve currency status of the US dollar. We've seen a lot of noise about the US potentially losing its status as a reserve currency. And there's a lot of Sturm und Drang that arises out of that. There's a lot of consternation because a lot of people don't quite know what would happen if we did lose our reserve currency status, or what it actually means to have the reserve currency globally. So we're going to talk a little bit about what it means, what is it, and our prognosis. So we'll just jump in right now. So first of all, what is a reserve currency? A reserve currency is a foreign currency held in significant quantities by central banks or other monetary authorities as part of their foreign exchange reserve. So what happens is central banks and governments, just like the United States, have cash. And as part of their cash, they have a currency that is deemed to hold some value. They can use this as money. It's used as a medium of exchange, and it's used as a way to preserve wealth. The U.S. government does that, foreign governments do that, and it's basically their savings account. And for the U.S., we keep U.S. dollars. We do keep some other currencies as well, but largely we keep U.S. dollars. Other countries actually hold U.S. dollars in their own reserves. So when it's a reserve currency, that's what it means. So to assess whether we are a reserve currency or not, you have to look at the foreign exchange reserves held by other foreign governments. And this is where we've historically, in between the 1200s and the 1500s, you had the Venetian ducat and the Florentine florin. These were both gold-based currencies, and they connected the Arab and European worlds. The Florentines, obviously, the merchants, the Venetians, same thing, and really controlled a lot of the banking in Europe at that time of the Renaissance. And then between the 1500s and 1800s, with the decline of Florence and the decline of the Medici family, you had the rise of the Spanish. And the Spanish had a lot of holdings in South America, which is very rich in silver. And so they used the Spanish silver dollar as a reserve currency, again, very imperialist. empire, really, the Spanish at that point. You also had a little bit of a lesser reserve currency at the time, the Dutch guilder, which was used especially in Europe, going intra-Europe, and as well as the Dutch colonial empire, including in Africa. And then you shifted gears, and we talked a lot about the rise of the British post 1688 and the Glorious Revolution. And we talked about the rise of debt. And part of the rise of debt is that now there was a an instrument where other governments could invest, and they could buy the debt of the British. And in the 1800s, as that debt began to come down, the British were seen as a very safe place to be. And you had the rise of the British Empire, a lot of trading that happened. In fact, 60% of the world trade was done in British pounds in the 1800s and the 1900s in the Victorian era. They were the leading exporter of manufactured goods, and the British pound sterling really rose to prominence. And it wasn't really until after World War II when the US dollar took over. And that was done as part of a multinational corporation, a multinational agreement at Bretton Woods. The Bretton Woods Treaty, you may remember from the history books. The US dollar was placed deliberately as the anchor of the new international finance system. So this was intentionally done post World War II to provide some stability to the Western world. And that continues to exist today. What happened during the Nixon administration is they went off the gold standard. It was originally based off of gold, but now after the Nixon administration, we went to a fully fiat currency. But the US dollar still is governed by the Bretton Woods Treaty and the fact that the US dollar is deliberately the anchor of the new international financial system. So today, this is what the reserve currency benefits are. You have greater demand for government bonds, because if you're a foreign government, say you are a European government, and the US dollar is your reserve currency, you need US dollars in your vault, so to speak. And so you buy US government debt. And so there is a little bit higher demand for US government bonds than there otherwise might be, which can help our interest rates. We'll talk a little bit about the impact of that, because I think sometimes the impact is overstated. And we'll see that in a chart in a few slides. You do have, when you're the reserve currency, you also have greater control of interest rates, because you are not concerned as much about foreign exchange, because you know that other countries are going to be using your currency. So regardless of what you do from a monetary supply situation, you're probably going to be okay. And that kind of corresponds with the reduced exchange rate risk. In the United States, we have lower exchange rate risk because the risk of decoupling with the rest of the world is extremely low, because the rest of the world uses US dollars. So the odds of our US dollar just spiraling out of control relative to other currencies and making other imports extraordinarily expensive, that risk is relatively low. So that helps us over the long term as well. So these are all benefits of having the world's reserve currency. So with that, where are we today? Right now, the US dollar comprises 58% of global foreign exchange reserves, well over half, and that's remained relatively stable. It is down since the 70s, but really it's quite stable since even the Reagan administration. And actually, after the Berlin Wall fell, and prior to the Deutschmark ending and transitioning to the euro, the US dollar actually had less than 50% of the global foreign exchange reserves. So we're at 58% now, which is a pretty good position to be. Clearly, the US is the reserve currency. And as you can also see, I mean, these changes don't happen overnight. Even if we were to enter a period of secular decline in terms of US dollar as the world's reserve currency, I mean, maybe we go down 1 or 2% per year, in which case we have at least 58 years before we're done, if that started to happen today. So the timeline on these things is extraordinarily long and will outlive most of us. Since 2008, so over the last 15 years, and I chose 2008 because that was global financial crisis, which was before all this money printing and really before this rise in the U.S. debt. So the U.S. dollar has fallen from 63.8% to 58.4% of the world's reserves. So over the last 15 years, it has fallen by 5%. The euro's fallen 6%. And really making that up is other countries, whether it's China, whether it's Canada, whether it's Australia, increasing in terms of their currencies being used as part of a basket of reserve currencies. As more trades done with China, as more trades done with Canada, with more trades done with Australia. None of those are anywhere close to becoming a world reserve currency. I mean, you have China that is the world's second largest economy by GDP, and they're only 2.7% of reserves. So they've got a long way to go. What's interesting is post-Brexit, the British pound has actually found some strength. It is now 5% of global reserves. So they are feeling pretty good about their plan not to be part of the Eurozone. So as we try to assess where we go from here, I think it's important to know that reserve currencies tend to share some characteristics. And as you look through history, there are three that really pop out. The first one is being a leader in global trade. The second one, and you think of the British in the 1800s, you think of Florence in the Renaissance. So you're a leader in global trade. Number two is you're a leader in the sophisticated finance system of the day. So the Dutch were one of the first to have the central bank and more of a modern monetary authority. The Venetians and Florence, of course, we know that they really started banking. And then you also have to have a very strong rule of law in order to establish that currency has value and won't be eroded over time. So if we go through these one by one, you have to be a leader in global trade. Well, the U.S. is number 2 in exports and number 1 in imports in terms of percentage of world merchandise trade. So we tick those boxes. Are we the top exporter in the world? No, but we're in the conversation. We're also certainly at the top in terms of importers. If you're talking about sophisticated financial markets, I think the biggest there's a lot of data in this, but what I would say is probably the biggest one or biggest ones are your legal frameworks, where the U.S. scores very highly, the market infrastructure, and the market depth. In fact, market depth dramatically exceeds 99.6, much higher than any of the other countries listed here. And these are the top ones as ranked by, and I can get you the report on this. And then in terms of the investor base, I even think the low number on the investor base is actually a positive because it basically says what percentage of your market is outside of the United States. So it means that when we're at 85.8 and Japan's at 96.6, it means that we have a lot more foreigners investing in U.S. markets. So the investor base is a lot more global than something, say, in Japan, but still there's a very strong domestic push in our investor base that yields some stability. So we do have very sophisticated financial markets, and I would say probably even stronger than Japan if you look at those key indicators. And then in terms of rule of law, we're the second best country in the world to do trade with, behind the UK. By contrast, China's 7. We're the second in global innovation. By contrast, China is 11. And then specifically, you see just dramatic differences between where we are in the United States, where some of these other countries that have talked about reserve currencies are in terms of regulatory quality, rule of law, corruption, and economic freedom. The one that does stand out here is Singapore, but the drawback to Singapore is it's extremely small, and also it kind of uses the dollar as well. So where are we in terms of reserve currency status? Well, the United States doesn't dominate these rankings, but it's at the top or pretty close to the top in all of them. And then if you're talking about China and India, some of the other bigger economies, they lack regulatory authority, they lack sophisticated financial markets. The UK and Singapore lack some size. And then Europe, just in general, if you're talking about Germany, for instance, they lack dynamism and they lack consistency. The euro itself is a pretty new currency, and had the Deutschmark as a jumping off point, and even the euro is only 20% of global FX reserves, and that's a population of over 800 million people. So when you put that all together, I think that we're pretty good in terms of where we stand today in terms of reserve currency status. But at the same time, there have been news articles, and there are people talking about the BRICS countries coming up with a new currency. And the idea is they want to get off the US dollar. They don't want to be controlled by it. So you have Brazil, Russia, India, China, South Africa talking about a new currency that, quote, could be backed by gold, additional rare earth metals, or something else entirely. Clearly, they have a great idea of what they want it to be. I'm being facetious. But the steps right now, and they've outlined this, is that they want to transition it to settlements in their own national currencies. And you are beginning to see a little bit of that. You're seeing China buy some things in yuan rather than US dollars. So they're trying to take that first step, but it's very insular so far. And then the next step is to provide the circulation of a new currency in the near future. And that was a direct quote from them. So the next BRICS summit is August 22nd in South Africa. So I would expect to probably see more of this coming. But again, to dislodge what the United States is and the US dollar's role as a global reserve currency, I think that is a massive, massive task. I think, maybe they could come up with a currency that is like a euro light and maybe gets 5 to 10% share of foreign exchange reserves globally. But beyond that, I don't think that I don't think there's a big chance of it displacing the US dollar in the near term. What about gold? We get this question a lot. I think there's a couple drawbacks to gold as a reserve currency, at least in the near to medium term. You have the problem of political will. I mean, even when you talk about China potentially going to its own currency, they have manipulated money supply like crazy. That's one of the ways they've grown the way they did. Same with Russia, same with Japan, Japan is actually buying ETFs. They're buying stocks with their central bank. So, when you talk about political will to go to a gold-backed or hard asset-backed currency, I just don't think the political will is there because of the drawbacks and the contrast with fiat money. And then you also have the mechanics of it. If you are backed by gold and gold declines in value relative to the US dollar when you're trying to ramp it up, it's going to destroy the currency before you even get started. So you have to get the timing right, and then you have to get everything going your way, and maybe you could get somewhere on getting gold as a potential reserve currency. But I think that the likelihood of that in the medium term, frankly, even in the long term, is quite low, especially considering the strength of the US dollar in the market and desire for it as the global reserve currency today. So rounding it all out, the US dollar is the best house in a fiat neighborhood. Fiat meaning it's not backed by hard assets. At some point, the US dollar will probably be replaced as the global reserve currency, but I don't think this is happening in the foreseeable future. And I say that it'll probably be replaced just because that's the lesson of history. I mean, you had the Florentines dominating for 300 years, and then at some point, the Spanish came. That's just how the world works. But in our lifetimes, I think that it's the likelihood of that happening, and certainly I'm 32. Um, I think that it's extraordinarily likely in my career. So, but we do think that at some point the U.S. dollar may be replaced. But I think the key to remember is what is the similarity that a lot of the failures of previous reserve currencies had. And that is, it tends to be the result of decline as an economic superpower rather than the cause. So if we were to lose reserve currency status, it would probably be because um, something happens in the United States or in the rest of the world that another superpower comes and is obviously better and bigger than the United States. And so I think that would be the cause of losing the reserve currency status. So I think we need to flip it. And that the reserve currency losing that status is the effect rather than the cause. So I would leave you with that. Of course, we need to pay our debts. I think that's a big step in the right direction. But at this moment in time, I think that the near-term loss of the U.S. dollar as the world's reserve currency is quite low for all the reasons we said. So tomorrow we are back on our normal thing. We'll recap all the news from the week. There hasn't been a whole lot, but we'll see you at 8:30 tomorrow with the normal cast. For now, have a great day and stay safe.